After the market crash in 2020 due to the pandemic, the stock market has recovered swiftly and has made new record highs. However, some may think it recovered too swiftly. In today's video, we'll be going over why the well-renowned investor Jeremy Grantham thinks the stock market bubble could pop this spring. Hello everyone, this is Mark with MC Stocks, where we go over the basics of the stock market, investing, and bring you the latest news on trending stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. Be sure to use our referral links in the description below if you are a new investor and want to start investing, or if you're just looking for a new high-quality brokerage. M1 Finance is doing a great offer currently where you could get a free $30 using a referral link. So use the link below, earn an easy $30, and don't miss out. They're also giving you their premium M1 Plus service for free that gives you access to the afternoon trading window, a low 2% loan, and much more. It's the perfect time to sign up with M1 if you haven't done so already, so make sure you take advantage of the offer. So let's first talk about who Jeremy Grantham is. Grantham is the co-founder of the investment and asset management company GMO. Grantham is famous for predicting previous bear markets, such as the 1989 bear market in Japan, and most notably, the dot-com crash of 2000 and the housing crash of 2008. So what does he have to say about our current market? In case you haven't seen, the stock market has been doing phenomenally well with massive returns over just the past year. The S&P 500 saw a gain of about 17% in the past year, even after the pandemic crash back in March. The Dow saw about an 8% return over the past year, and the Nasdaq saw an astounding 43% gain. If you've been invested at all in the general market, there's a fairly good chance that you have made some money on your investments. Grantham, however, thinks that these returns are too good to be true because we are in a market bubble. A stock market bubble is a situation where stock prices are hyperinflated by investors and large investing institutions that drive stock prices way above their core fundamental values produced by their actual business. We can definitely see evidence of this type of hyperinflation of stock prices with no true correlation to their underlying business in the current market. Look no further than one of the most popular companies in the market right now, Tesla. Tesla stock has seen one of the fastest growths in history, with about 730% over the past year alone. Just last week, we released a video on how Tesla stock can grow past $750 per share, back when it was trading under $700. Now, it completely blew past that target with a price tag of over $800 per stock. This makes Tesla one of the biggest companies in the world with a market cap evaluation greater than Facebook and Alibaba, and a market cap evaluation greater than the largest car manufacturers combined. So, what would make Tesla an example of a stock price bubbling? Well, let's compare the financials of Tesla with Facebook and Alibaba. Tesla's revenue as of September 2020 is about $8.7 billion, with about $2 billion of that as profit. Now let's take a look at Facebook. They have $17 billion in revenue and about $9.5 billion as profit. So almost double the revenue and more than 4 times the profit. Lastly, let's look at Alibaba. They have $22 billion in revenue and about $9.5 billion in profits as of September's statement. So again, much higher revenue and much more profits than Tesla. And yet, Tesla's stock price keeps soaring. With this, Tesla's stock gains can only be explained by its intrinsic evaluation made by investors. Investors have the expectation that Tesla will revolutionize the world and become the next company to dominate the market. However, it is this, quote, hysterically speculative behavior that Grantham says is the cause of this market bubble and the eventual pop. This mass speculation is not limited just to Tesla, but across the entire market. The entire EV sector boom arguably can be traced back to the expectation that they will perform like Tesla. SPACs have been jumping in value on just the announcement of a merger alone, and dozens of companies have PE ratios in the thousands that are technically unjustifiable just looking at financials alone. Grantham predicts that this bubble will survive up to the late spring or early summer, around the time that the pandemic vaccines should be rolling out. After vaccine distribution, the world's most pressing issue, the pandemic, would disappear, but then it will be clear to market participants that the economy is still in bad shape, stimulus will be cut back, and company valuations are far overpriced. Whether or not Grantham's predictions will come true is ironically speculation in itself. There is no telling for certain how a market will react when the time comes. Investors may act just as Grantham says, or they may be fine with disjunction between the stock market and the overall economy. Or maybe there may not be an epic bubble burst, but a simple market correction for some stocks that are deemed overvalued. No one could say for certain what will happen in the end. So that is why you must always do your own due diligence when investing. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.